got a PhD in Islamic finance.
No way.
Yeah.
You're Dr. Hassan.
Yeah.
Oh, I didn't know that about you.
Yeah,
Okay,
yeah.
wow, incredible.
Yeah. I looked at Islamic finance and said, what a cool topic, especially that my background's in economics. I really wanted to dig deeper and figure out what's the Islamic solution to economics, what's the Islamic solution to finance. That intrigued me so much because when it came to Islamic finance in practice, I was quite disappointed. That's when I discovered no one was offering Sharia-compliant business financing. We've also had clients who have taken on interest-bearing financing and refinanced using our facility once they discovered there was a Sharia-compliant facility out there.
Incredible.
I mean, if we read into the Trump administration and what they're doing, right, we're looking at a new world order, if you want, a new world order coming into shape that is different to the one that existed for the last 100 years or after.
Post-World War II.
If more Muslims are going to be putting their hard-earned money into pension funds, into different types of products out there, there has to be some level of understanding of the risks they're exposed to.
In today's episode, I'm joined by Hassan Daher, the founder and the CEO of Qardus, a platform helping small businesses to raise money in a Sharia-compliant way. We discussed the current state of Islamic finance within the UK, why growing up in Muslim-majority countries like Lebanon and working in the likes of the UAE shaped Hassan's view of what Islamic finance could or should turn into, and his experience setting up an Islamic finance company from scratch. We also discussed the current economic state. Has Trump gone mad and is ruining the world? Is crypto Sharia compliant or not? Tune in to find out more. As always, I'm your host, Areeb Siddiqui, and this is Muslim Money Talk. Before we begin, we actually noticed only about 10% of you are subscribed to the podcast. So if you like what you're listening to and you want to hear more from us and see more things Muslim and money related, then please consider subscribing and of course leaving this episode a like and share it with your friends, leave us a comment or a review, because it really, really does help us out and help more people to find us. Thank you. Now back to the show. Hassan, assalamu alaikum, and welcome to the show.
Salam. Wa alaikum salam. Pleasure being here.
It's you were one of the first people that we wanted to come on, so it's been a long time coming, but thank you so much for spending the time with us today.
Yeah, it has. I'm really happy to be on your show. I mean, I look forward to the conversation.
No, likewise. I feel like we've been doing this for kind of the same amount of time. Yeah. I think Qardus started, was it 2020, 2021?
Yeah. 2020, yeah.
2020, okay, yeah. So same as us.
Yeah.
So 5 years.
Yeah.
Fifth year. SubhanAllah, how does that feel?
Alhamdulillah, I mean, you know how it is, the startup journey, right? It's very rocky, but I mean, it's good to see that we're both still here with everything that's happening. And
that's exactly how I felt about it. Like, it's good just to still be here.
Yeah. I mean, it just goes to show how many lots of hustlers in the Islamic finance space, and we just go about doing things, even though
for sure.
Yeah.
For sure. And did you feel like the 5 years went just like this, or has it felt like really long?
I mean, it's very fast paced, right? Like. Even now, we're working on a lot of stuff, even behind the scenes and everything. I wouldn't say necessarily it's gone quickly. It feels like it's gone quickly because, as you would know, as a startup founder, you're always under pressure. You're always just constantly evolving, right? So it's not like you're in a steady job where you basically give or take. You know what you've been brought in for, as well as what you need to do. No, as a startup founder, you're just always...
The future is so unclear.
Yeah.
Like our team were getting me to film a day in the life.
Yeah.
And that was so hard for me because I'm like, there's no day which is the same, right, as each other. So I don't know exactly what to film that's going to portray a typical day in the life of a startup founder CEO, especially in fintech.
Definitely.
But hey, man, let's get into it.
Definitely.
So just for our viewers so they know, could you sum up Qardus in 1 or 2 lines?
So Qardus is the first Sharia-compliant SME lender in the UK. We offer between £50,000 to £500,000 in Sharia-compliant financing to businesses that are eligible.
Wow.
And our platform initially was data-driven, but it's getting even more and more data-driven with all the work that we're doing at the moment.
Incredible.
Yeah.
So a platform helping businesses to raise finances in an ethical and Sharia-compliant fashion.
That's right.
Anywhere from £50,000 to £500,000.
Yeah.
And how many businesses have you helped so far over the last 5 years?
So far we've helped around 50 businesses.
Okay.
With a very small team. Right now, Alhamdulillah, we're hiring. We have recently received terms on an institutional credit line as well.
Okay.
So we're
Mashallah, that's incredible.
yeah.
Yeah. So that's your institutional funding, but
Yeah.
so far you've been raising the capital from retail investors.
That's correct.
Yeah.
So we've been raising the capital on the peer-to-peer side, crowdfunding side. So anything from retail investors to high net worth investors
Okay.
and self-certified sophisticated investors.
Incredible. So there's so much I want to get into with you about Qardus, the inspiration, how you set it up, what the journey has been like along the way. But I want to rewind and go back in your history to how it all started and what your early inspirations were. So I understand you grew up in Lebanon.
Yeah.
So what was that like?
Yeah, I've had a typical Lebanese upbringing in that I was born during the Civil War, so I was actually born in Paris, France, and then we moved around a bit. When the situation stabilized, I was around 10 years old, moved back to Lebanon.
Wow.
Stayed there till I was 18. I mean, Lebanon is a great place. I mean, we've got one of the highest education rates in the Middle East. So we never had petrol or anything like that, basically to subsidize our incomes or anything like that. So even though they found gas recently, but so I mean, very high education levels. Most of us speak 3 languages.
English, Arabic, and French?
Yeah, English, Arabic, and French. Historically, we used to be traders. So, for example, Lebanese used to be, the background is Canaanites and Phoenicians, similar to the Palestinians, if you want, and the Jordanians. So we used to got a history of trading. Shipbuilding for the pharaohs. Lots of prophets have blessed us in our part of the world as well. What they call in Arabic Bilad al-Sham. So I mean, it's a very rich area in history. But obviously, it's also over the last 100 years. It's the war with Israel that not only defined us historically, but still defines us today.
To this day, to this very moment.
To this very moment. So I think it's one of the things where it is getting worse. It is getting worse, like what we're seeing in Gaza and what we saw in Lebanon recently. I spent a lot of time in Lebanon, and I could tell you it's never been as worse than it is today, basically.
Really?
Yeah.
So I remember just seeing, it was only a couple of months ago, but a whole apartment block just being taken down.
Yeah.
And I think that was a real wake-up call to so many other people that, okay, this is extending.
Yeah.
And just, growing. To so many people today, they didn't think they would see that in their lifetimes.
Yeah, definitely.
So is that kind of what precipitated your move to higher education in the UK, that you wanted to move out of Lebanon? Because you studied in Manchester.
Yeah, so I studied in Manchester, not necessarily, to be honest. I mean, the education system in Lebanon is really good. And sometimes looking back, I'd say I should have maybe considered the American University of Beirut, because it gives a very well-rounded education. But I visited the UK several times, and I did want to spend some time here and learn, just to, if you want, have a different experience, because Beirut's a very small city.
Yeah.
I just felt as a university student, I wanted to try a new experience and go to university in a different environment.
New culture.
Yeah.
Were you the first of your siblings to go out internationally to study, or?
Yeah.
You were, okay.
Yeah, so I'm the first of my siblings in terms of it's also because I'm the eldest.
Yeah.
But for example, my father studied in France. Again, it's the war that defined.
That's what I was thinking.
Yeah.
Okay, so your father had done, so it wasn't like new or anything. It was almost like an expectation, I suppose.
Yeah.
That you would go out and study.
Yeah.
So you studied there, and then, if I'm remembering correctly, you found yourself in the UAE.
Yeah.
In Dubai, and I think you and I had a similar journey in that we both started at Deloitte.
Yeah.
Is that right?
That's right.
Wow, what was it like at Deloitte in Dubai?
So at the time, Dubai was growing.
Okay.
It's still growing, isn't it? But
when was this? It was like mid 2000s.
So I went to Dubai in 2006.
2006. Yeah.
2006 all the way to 2012.
Okay.
Yeah. So I spent 6 years. Initially, I was in the audit practice, and then I moved into corporate finance. So they had set up the global advisory practice for M&A in Dubai. Was like a 50-50 JV between the UK and the Middle East.
Really?
Practices.
Wow.
Yeah.
So you started off, you did your chartered accountancy, 3 years in UAE, and then I think like many people, they then move into M&A corporate finance after that.
Yeah.
Okay, that sounds really exciting.
Yeah.
JV. What were your clients like? Was it beyond just the GCC?
So I mean, we spent a lot of time doing work for sovereign wealth funds, for example, ADIA, the Abu Dhabi investment.
Yeah.
That took us all the way, for example, to South Korea.
Wow.
To work on a aerospace project they were doing with the Korean aerospace unit, for example. Primarily GCC and the Middle East. So did some work in Jordan, did some work in North Africa. So allowed me to discover the Middle East region as well. But we did every now and then have projects that took us outside the Middle East.
Incredible.
As well. Yeah.
So you were doing that, and did you come across Islamic finance during this time? Because obviously you grew up in a Muslim country.
Yeah.
What was your idea of Islamic finance growing up in and around these environments?
Yeah. So I mean, it's a very good question. Every now and then, I mean, obviously I knew about Islamic finance being a Muslim, but every now and then we would have projects that needed to be structured in a Sharia-compliant way.
Yeah.
So I've done, for example, financial modeling assignments where we had to start researching about murabaha and musharaka and all that kind of stuff. That's where I first gained exposure. Then upon becoming a CFA charter holder, I wanted to learn more. I saw that the Arab...
Oh, you did CFA?
Oh, yeah.
Okay.
Yeah.
So for people who don't know, CFA, Chartered Financial Analyst, is one of the harder qualifications that you can do in the space. And a lot of investment bankers, analysts end up doing that. I think the only thing harder in terms of pass rates is the actuarial exams, which has like crazy low pass rate of like 13%.
I can imagine.
I think the only person I know who's completed is Raza Ullah, who's the founder of Fider.
Okay.
He was one of the earlier episodes, so you can check that out. But you did the CFA.
I did the CFA, finished it in 2012.
With Deloitte? Was you at Deloitte?
Yeah, with Deloitte. I mean, that burnt me out basically because
of course.
I would work till like 6, 7 in the evening and then study till 12 midnight.
Wow.
And then weekends just studying, just trying to carve out time in your schedule to study for it, which was which was very which was very tough.
It can be soul destroying, right?
Yeah.
Were you married at the time?
No.
Okay.
I'm pretty sure if I was married, I'd be watching that.
that episode we did with Imam Shabir, the why Muslim marriages are failing. No, it is hard. It's crazy hard, especially for married people. So I would always say, like, if people are doing any kind of qualification, try and get that done whilst you're single. Because you're just not going to have the time, realistically, I think.
100%. It's just no way to make the time.
For sure.
Yeah.
So you did that. You saw this idea of Islamic finance growing up in Muslim countries. You had experience with some deals. What was your impression of Islamic finance at the time?
So my impression of Islamic finance, to be honest, was behind the curve when it came to digitization.
Okay.
Lots of liquidity because all the oil money is going into the Islamic banks. So very liquid, very rich. But nothing excited me when it came to digitization. To seeing something, and I never looked at Islamic finance. I looked at Islamic finance and said, what a cool topic, especially that my background's in economics. I really wanted to dig deeper and figure out what's the Islamic solution to economics, what's the Islamic solution to finance. That intrigued me so much. Because the more I read about it, the more I wanted to dig deeper. But when it came to Islamic finance in practice, I was quite disappointed because I never felt that there was a product or even an institution that I felt was really pushing the boundaries. Rather, it was quite what you expect in the sense that online you don't have much of a platform to use and quite slow when it came to offering services as well. Yeah,
especially back then.
Especially
back then.
2012,
the early 2010s. It was not a great scene in Islamic finance at the time. So then, what motivated you to move into the space? Because there's a bit of time between Deloitte and then you founding Qardus. 8 years later. What journey did you go on?
So what I did then was I took some time off. That took me all the way to Kuala Lumpur.
Wow.
So I wanted to study Islamic finance in more detail. So what happened then is I looked at institutions around the world. I found some degrees that were being offered here, masters, etc. But I felt that because of the limited track record in Islamic finance, or if you want, Islamic finance, what makes Islamic finance stand out is Islamic commercial law. And Islamic commercial law is based on, to a certain extent, on the Islamic, not to a certain extent, it's based on the Islamic legal system, but you definitely need precedents to have a deep well of case studies to go by, right? So I felt that Malaysia was way ahead of the curve when it came to that. Found an institution called NCIF that's part of Bank Negara.
NCF, yes, that's right. So they're like a Bank Negara approved Islamic finance university, effectively.
That's exactly it. So went there, got a PhD in Islamic finance.
No way.
Yeah.
You're Dr. Hassan.
Yeah.
Oh, I didn't know that about you. Okay, wow, incredible.
Yeah.
Wow.
So I mean, published a couple of articles in this space, got over 100 citations, in some of them on Islamic banking.
Amazing.
Alhamdulillah, so I did that quite quickly, finished that in a couple of years. Did some consulting work on the side in the meantime for a couple of insurance companies, financial modeling, all that sort of stuff. And then came back here to the UK. So then what I did was I wanted to do something in the fintech space, wanted to do something in the Islamic finance space, didn't know what. So joined Entrepreneur First.
Okay, so Entrepreneur First is kind of like an accelerator scheme.
Yeah.
For entrepreneurs.
Yeah.
But I think they differ in that you can go in there maybe not with a concrete idea.
Yeah.
Per se, and then they help you find that idea.
Yeah.
And maybe even match you up with co-founders as well.
That's exactly it.
Okay.
So it's early stage incubator program. They give you a stipend basically to come and ideate, just come up with ideas, right? So I came in knowing what I wanted to do to a certain extent. I'd say the experience was interesting. I wouldn't necessarily advise. So I'd advise maybe founders in the deep tech space to go into Entrepreneur First. Wouldn't necessarily advise fintech founders to go in there.
Really? You didn't find it that useful?
So it's a pressure cooker for sure. You have to come in with certain expectations in the sense that you and your co-founder are 50-50 shareholders in the business. I found it difficult to, so if you look at the profile of the people in my cohort, I was expecting to go in and find CTOs with a background in fintech.
Right.
I didn't necessarily find that. So you end up coupling with a nuclear physicist, for example, or doing stuff like that. And then the aim of the system is to break you up with your co-founder if you want, to see how, if you want, robust your idea is.
Yes.
So you end up doing this and just going around in circles, meeting different co-founders. Towards the end of it, I was a co-founder with a guy with a background in data science, ex-Facebook, but that didn't work out really. That was around the time I looked to get funding from SFC Capital, and that allowed me to go into another accelerator program called Founders Factory.
Yeah, I know Founders Factory.
Yeah.
Okay.
Yeah.
Right.
That experience I liked. So they ended up getting funding from SFC Capital Founders Factory.
Nice.
They're hands-on. They pulled their sleeves up. So that was very interesting.
That was just you as a solo founder, basically.
Yeah.
Going in there. You got a bit of seed capital now.
Yeah.
And was the idea for Qardus kind of formed already whilst you're at Entrepreneur First and you're like, okay, I know what I'm going to use this money for?
Yeah. So it came through Entrepreneur First, and then it became more consolidated through Founders Factory. So what I did was essentially that I'd cold call people myself.
Sure.
Muslim, let's just say Muslim entrepreneurs primarily, and I tried to figure out their pain points. That's when I discovered no one was offering Sharia-compliant business financing. So the likes of Arayan maybe might have a couple of clients that they offer Islamic banking to, very high, I wouldn't say SMEs, I'd say probably more towards medium-sized enterprises. And they might be able to offer them, if you want, secured finance, much larger ticket sizes, but I felt no one was offering micro SMEs.
So by larger ticket sizes, you mean like 2 million plus?
Exactly.
That kind of thing.
Exactly.
No one really going down to, I just need 100,000 to get this done.
100%. Prepare a credit file, put it in a drawer, take it to the credit committee. Would take 3 to 6 months to come up with a decision. And on top of that, it's not really their bread and butter, right? Because they're primarily in the property space.
For sure. Whereas what kind of businesses were you talking to?
Yeah, so I was talking primarily to micro SMEs.
Right.
So by UK standards, I think at the moment it's, let's say in and around anything up to £2 million, less than 10 employees.
£2 million in annual revenue?
In annual revenues,
Okay.
anything up to that. So you've got some businesses that do less. You've got some people that run turnovers of £500,000, for example. But they've got good margins, so they could even take on more financing. And you've got we've funded businesses that do £12 million with very thin margins. So it's not necessarily turnovers, rather cash flows for us that dictate which businesses are worth.
Okay, that's really interesting.
Yeah.
So talk me through the exact problem you found people were experiencing. Was it just that I'm a Muslim, I run a business, the kinds of financing that's available to me has to be Sharia compliant. And if I went to a non-Sharia compliant place, was it that they were too small to qualify for the funding, or was it that they did qualify for the funding, but that financing was non-Sharia compliant because of the interest that they would have to pay on the loan they were taking?
So it's rather these businesses are creditworthy.
Okay.
So even sometimes they'd get us term sheets from Funding Circle, from IWOCA, from the traditional lenders. It's rather that they're looking for a financing facility that doesn't compromise their beliefs.
Okay.
So it's the riba that basically motivates them to take Islamic financing. So we've had different clients. We've had clients, for example, who never took on financing. They built the businesses the old-fashioned way, in the sense that they bootstrapped the business, slowly started generating profits, reinvested the profits to grow, even though that takes a long time to do. We've had clients like that. We've also had clients who have taken on interest-bearing financing and refinanced using our facility once they discovered there was a Sharia-compliant facility out there.
Incredible. So that was the real problem you discovered for Muslim founders finding a Sharia-compliant facility. How did you create this solution? How did you come up with this one where it was like, okay, we're going to go out to the crowd and we're going to raise funds there, and then we're going to use that to invest into these individuals? Because I think on the face of it, is that not quite difficult to do? Because you're running a platform, funding could be uncertain, you have to go out and basically market these opportunities to a crowd of people. Why did you choose this way of doing it?
I've always wanted to build a track record in this space, so we could get to the stage where we're at right now, to be able to bring on institutional capital. At the time, we were looking at different methods to do it. Given we didn't have a track record, we couldn't just go and get, for example, a funding line and draw down on that funding line. Some people can, given if they come from certain backgrounds with track records in the space. So if you're a seasoned, like if you were, I don't know, a director at the likes of Funding Circle or anything like that, and you could demonstrate a track record, then possibly you might be able to do that.
Sure.
Or if you've got really solid relations in the private banking or family office space, maybe. With us, so we wanted to do that. We saw that peer-to-peer at the time crowdfunding was easy and cost-efficient way of doing this. But we quickly discovered, Areeb, that there was a second problem here that I didn't notice, is that the lack of Sharia-compliant fixed income opportunities that generate good returns. Once we discovered that, we had a two-sided marketplace solving two problems. One is Muslim-owned small businesses cannot find a Sharia-compliant business financing facility that's unsecured, which is important to mention.
What do you mean by unsecured?
If you look at unsecured and secured, secured is a type of financing where the lender takes a charge on an asset, so ends up being lower risk because
if something were to go wrong, they could claim that asset and liquidate the asset itself.
That's correct. Okay. So they have a first charge often on the asset, or let's say second charge if the asset is got a lot of value, and they could come in, sell the asset and recover the financing. Unsecured, we take personal guarantees from the directors, but we don't take a charge on the asset. So if anything goes wrong, the director is liable for the amount of financing that's still owed.
Really? Okay.
But it's not like we're taking a charge on any asset, so we are exposed to risk, and that's why our platform's littered with the capital at risk.
Capital at risk, of course. So
returns not guaranteed, all that kind of
understood,
thing.
Understood. So you discovered it's a two-sided problem.
Yeah.
It's not just businesses looking for Sharia-compliant financing; it's individuals looking for Sharia-compliant returns, but not just returns, good returns.
Yeah.
Fixed returns.
Yeah. Yeah.
And what kind of returns do you guys do compared to the market at large?
So historically, we've been able to offer between 10 to 11%
Wow, okay.
per annum.
Okay. Compared to an Islamic bank savings account right now, which is maybe 4% at the moment.
Exactly.
Yeah.
Exactly. 4%, and that's basically in line with what you'd expect from peer-to-peer, because you're moving the intermediary, the financial intermediary. You're moving the bank from the equation, right?
Yeah.
So you're trying to set them up, even though we do the underwriting in-house. Yeah. So we're not effectively building our own financing book, but we are underwriting and making sure that the businesses, to the best of our abilities, are good businesses.
Creditworthy in that
business.
way with
Yeah.
your. So that's also what I wanted to ask you. So talk me through the process from a business.
Yeah.
I'm a business. I make $500,000 a year.
Yeah.
There's a really interesting. Maybe I run a pharmacy.
Okay.
And what I want to do is I want to set up a new pharmacy.
Yeah.
Right. 2 zones away in London. And I need to draw down £500,000 from you.
Yeah.
I would go to your website. I would apply through you guys. What kind of stuff would you ask for me?
Yeah.
And how would you assume that I was creditworthy?
Okay. We do some initial checks. Our current online application form is quite simple. We have a new application form coming in soon that asks for a lot more information. But initially what we do is could do simple checks such as go on company's house, use the credit providers.
Experian and all of that on the directors themselves?
On the directors and the businesses as well, just to make sure there aren't any country court judgments, CCJs or anything like that. So that's if you want level 1, just to make sure that the business is... there aren't any red flags, right? So we typically look at a business that's been trading for at least 3 years, cash flow positive, has been profitable in the last 2 years, no CCJs, and obviously the sector has to be Sharia-compliant.
Okay.
Yeah, and the directors must be UK residents. So that's the typical business that we look at. So once we do that, then we look at 12 months of bank statements and 2 years of financial accounts. Currently, we have open banking access, so we look at open banking, and then we start the underwriting process. On the back of it, the business receives a term sheet, so we have a risk matrix and a pricing matrix that defines the risk of the small business, and then prices it accordingly. And that's when we send the term sheet to the small business. Once the small business accepts the term sheet, that's when we go into the next phase, which is the fundraising phase.
Got it. Okay, fine. So then basically it's like you're approved, you're on the platform, now you open it up to the public.
Yeah.
You're like, okay, there's 500,000 available to invest into this.
Yeah.
How are you reaching out to those customers? How are you distributing the deal right now?
So I mean, when we first started off, we had a partnerships page with Islamic Finance Guru.
Oh yeah.
Yeah. Early on.
I remember on their marketplace they had
So,
okay.
But that I mean, we're not. We haven't seen a lot of leads come through that over the last couple of years. So rather, we've been reaching out to people using different methods. So we have an in-house, if you want, team that reaches out to investors. You'll be amazed how much word of mouth goes, especially in this community.
Yeah, with this community where it's so trust focused, I feel like word of mouth is the primary way of going there. I have to say something. For a good few years, if you typed in any Islamic finance question on Google, you know where I'm going with this. It was a Qardus article that would always come up. You guys were rising to the top for the longest time. I think you guys are still on the Google #1 page. And I remember thinking, this was back in like 21, 22. I was like, how are these guys doing it? And then I was reading your articles. They were fantastic articles. Was it you who was doing them? Or did you have a team?
I was writing a couple, but yeah, we have a team that works in it. We should spend more time doing that stuff, to be honest.
Yeah, because your search engine optimization was fantastic. And I don't know whether you were doing it on purpose or you were just putting out content and it was like just rising to the top. Was it a proper plan?
Yeah, it was a proper plan to rank high for lots of different search terms in the Islamic finance space. some of the guys in the SEO call it back of the funnel work, where
Yes.
the Islamic finance words are not necessarily the most sought after words, but there are ways to be able to to use them. I mean, some of the stuff were not intentional. So when we wrote an article on cryptocurrency, then cryptocurrency got really hot, and went viral like crazy.
And every like Muslim tech bro was is crypto halal.
100%. And that's when our article just shut up. But I mean, we've been very careful. I know some other players in the fintech space constantly buying
Bitcoin.
No, I mean they're constantly buying links.
Oh, buying links, sure.
Yeah, huge amounts of links just being bought.
There was a time where if you just typed in our Kestrl on Google, one of our competitors' names would be like right there at the top, and then a second competitor, and then we'd be third. I was like, how is this allowed? How can people buy your own name? Right?
It's crazy.
Yeah,
it's
very interesting. Very interesting. Okay, cool. So two sides of that. Was that ever really daunting that you have to manage both sides of this process? And you were quite a small team at the start, especially maybe 7-8 people. Was that right?
Yeah.
How were you doing that?
It's still daunting, to be honest, because it's a chicken and egg thing where you either have too much liquidity or not enough deals. So you're constantly doing that. I could tell you, I was spread out too thin. I'm working on a lot of different things always. So that's one of the ways we're doing that. It's that when you have a small team, the founder ends up doing a lot of stuff. A lot of stuff he shouldn't necessarily be spending his time on as we started. But now we're trying to just clearly define the roles more.
Roles. So how big is your team now?
So currently we're 8 people, but we're expecting to be over the next couple of weeks. We're adding 2 more.
Nice.
2 more people, and we're just going to grow accordingly.
Thank you for listening to Muslim Money Talk. If you like what you've heard so far, you might be interested in checking out what we do at Kestrl, the Muslim Money app. Kestrl is a service that helps Muslims who want to grow their wealth without having to compromise, whether it's on their belief or user experience or price. I founded Kestrl because of how fed up I was at how poor Islamic financial services were in this country. Often people didn't use them because of how bad the user experience or customer service, and indeed how high on price they were. So Kestrl was the answer to that. If you download the Kestrl app today, it can help you by creating a budgeting plan. Plug in whatever bank account you have and it will create a auto budget just for you. You can then tell us what goals you're saving for and we'll save towards them automatically into pots, and then crucially link you towards Sharia-compliant investment and savings products as well. So download Kestrl today and try it out for yourself. Now back to the podcast. So how did you ever find that you were approaching burnout during the past 5 years, just doing so much? Like I'm asking from a personal experience. I definitely hit that at some point, and it was when I started this journey. I wasn't married, I didn't have kids, and then during the process I got married. Now have 2 babies, and it's just like, alhamdulillah, it was amazing. And there's definitely, you see barakah in your work and you see your rizq increase, but at the same time you can't have that same mentality where I'm going to be doing this and checking in on the tech team and then doing the marketing and the sales and distribution, talking to the shareholders and like a whole 10 other things that I'm sure you were doing as well at the same time. So how did you start approaching burnout, and how did you deal with that?
So it's actually a very good question, and I think only another founder would like understand the level of pressure you're under, whether it's fundraising, whether it's even the operational stuff, building traction. Any way you look at it, there's certain kind of pressure. And I would say in the early stages, definitely, I would approach burnout several times. I wouldn't say many times, but several times on several occasions. It's primarily because of 2 things. One is you're more likely to build expectations in the early stages, I would say, where let's say you're having a good conversation with an investor and you're like, okay, this one's in the bag, right? And you're doing that, and then you get your expectations set a certain way, and then if it doesn't fall through, or if it falls through, it doesn't actually happen, then you drop quickly. But having said that, I did get to a stage over the last year and a half. I'd say my personality got accustomed to the type of pressure I'm under, if you want, and I've set my expectations, or I set my expectations clearly.
More realistically, I guess.
More realistically,
Yeah.
definitely. But one point that you mentioned that's really important is when it's just you, it's fine. Any founder who's honest with himself must understand the probability of failure in the startup space, which is very high, and it only starts coming down over time. But once you have, for example, once you're married, once you have children, once everything, you definitely become more risk averse. And you try to find, if you're already in the startup space, it's something you need to deal with, and you need to manage accordingly, and you need to try to de-risk as quickly as possible to be able to get to that next stage. So
For sure.
yeah.
And how did you start doing that at Qardus? How did you start de-risking?
So we started primarily de-risking by improving our unit economics.
Okay.
So how much does it cost us to acquire a small business? How much does it cost us to acquire an investor? How can we spend money on the acquisition channels that work and not spend any money on the acquisition channels that don't work? So it's about being honest with ourselves as well, understanding the data, and then making decisions and funneling the funds, the limited amount of funds that you have in the acquisition channels that work with us. Is about having very clean data sets. So just to give you an example, I receive a flyer from Funding Circle, from some of the other SME lenders every single week, and that's even flyers to SPVs that I know are not eligible for funding. So they've got this indiscriminate way of just sending out
Flyers, like actual, just like
physical
stuff in the
flyers.
letterbox.
Yeah.
Oh, really?
Yeah.
Okay.
Whereby with us, we clean our data sets, we filter our data sets as much as possible. So when we're targeting businesses given the publicly available information that are most likely to meet our eligibility criteria. We either reach out to them by calling them, emails, social media, flyers as well. We reach out to them in different methods.
And what's the best success rate for you right now when talking to businesses? Is it physical? Is it you like turning up and talking to them, or holding events and bringing them to you?
We plan to do more events going forwards. In the past, we haven't. We didn't spend too much time doing events, but we understand the network effects at play, and we want to do more events going forward. So I would say it's a mixed funnel.
Okay.
It's a mix of several things. But ultimately, what it comes down to is approaching the right kind of business. So if I want to send 5,000 flyers, for example, or 5,000 emails, and I'm targeting, let's say, companies founded last year, or let's say startups as well, I'm not going to fund these businesses based on our current eligibility criteria. So how much can we filter the data sets? How much can we enrich the data sets? And how much can we reach out to businesses that meet our criteria?
Yeah, because it's all those factors. Okay, how many businesses have been running for 3 years? How many of them are actually profitable for those 3 years? How many of them are then Sharia compliant? Because it's not like you're going to fund someone who's running a brewery or a weapons manufacturer or something of that nature.
Yeah, 100%.
Right? Okay, that's so interesting. And then from a investor perspective, what's the future of that? Do you want to stick with peer-to-peer, or now you have this institutional line, mashallah? Is that really what you want to be doing more and more of, institutional?
We want to have a good diversified funding base. So we're bringing in that institutional credit line, inshallah, very soon. But we don't want to close the peer-to-peer side. Rather, what we're doing is, inshallah, very soon we'll be coming, hopefully, with an IFISA.
Okay.
For
incredible. That's what I wanted to ask. So you'll have your own actual savings product that people would just invest into, and then you will determine where the money's being invested on your own. Okay, because that must be way less of a headache for liquidity management on your side,
100%,
right?
100%.
Okay, incredible.
And then gradually go into fund management.
Amazing.
As that would be the objective.
Fantastic.
And yeah, that's the plan if you want on the investor side. Let alone the institutional funding line and
incredible
the different dynamics.
I'm looking forward to that. And have you given any thoughts into venturing into maybe venture capital? Change it. It will be completely different criteria. You'll be looking at businesses which are much younger, probably haven't hit profitability, much riskier profiles. But is that something you've given some thought to?
So we haven't given it much thought to, but I'd say it's more on the line of product development.
Okay.
So if we were to, for example, go into that space, I don't think our current product would make sense for that. Rather, we'd need to go profit and loss sharing product, and then it's pricing it like that's going to be really expensive. I think it's why I think maybe equity is the best form of financing for startups.
For startups, yeah, for
Yeah.
sure, absolutely. So the Sharia, talk me through the contracts that you use at the moment.
Yeah.
Are you using a commodity murabaha contract?
Yeah.
Or, okay.
So for the working capital financing, we're using a commodity murabaha. We're working on other contracts for. We're working on new products that take into consideration other products.
Yeah.
But for working capital, yeah, it's commodity murabaha.
Okay.
We've really tried to look at other methods. Very difficult in the UK.
Because commodity murabaha has been set up to kind of conform as much as possible with UK legals.
Yes. Yeah.
Could you talk our customers through a little bit about how that would work
Yeah.
with a business?
Yeah. So ultimately, the objective is to offer the business liquidity, because we're offering unsecured business finance for working capital purposes primarily. The way it works is all that stuff happens in the back end of our system in terms of the... so once the business signs the master commodity murabaha arrangement, and before drawdown, we execute the trade of metals, readily available metals, on the same day of drawdown, to effectively sell the metals to the business, and then act as the agent of the business, sell the metal and give them the money. So what the small business is left with is, let's say, £100,000, let's say at a profit rate of, let's say, 15% per annum, that they need to repay over the 36 months of the facility on a deferred payment.
For this metal that has been exchanged as part of this contract?
Yeah.
Okay, very interesting.
I wouldn't say it's necessarily the most practical, or it is the most practical. I'd say it's not the most efficient way of doing business, but it's what's available when you look at Islamic finance at the moment.
Yeah.
It would be great if Sharia scholars can try to figure out a way of designing new products.
Yeah.
Yeah.
I mean, we're seeing new products enter as well. I don't know if you're familiar with Cordoba Capital, but we had Haris Rafan on the podcast a few months ago, and he's coming up with an interesting promissory note, a PPN product, which is doing some trade financing, when it's not using commodity murabaha. I'm going to do it in injustice, so if you want to check it out, we'll put the link to the episode below. But so people are experimenting with different things, but I absolutely sympathize with the idea that this is the thing which is most largely accepted.
There has to be a focus on scaling as well.
Yeah. That's the thing.
Yeah, so if you're running maybe one transaction of £10 million, you might be able to use a product that is not necessarily scalable because you're running a corporate finance boutique, right? But if you're running something that you need to execute quickly, get the financing onto someone who might not necessarily be literate when it comes to finance, so you need to hold his hand and explain to him what he's taking on and how he's taking it on. I think, that should also be taken into account when it comes to products.
That's amazing, Qardus. I think the other thing I wanted to talk to you about, Hassan, as well, is as an economist, this is quite an interesting time to be alive.
Definitely.
So with everything that's going on, Trump introducing tariffs that has basically seriously negatively impacted stock prices around the world, specifically in the US, but we're seeing a lot of people who have invested or have their pensions in Sharia-compliant funds, which were primarily created and built upon US stocks. A lot of them are seeing their prices plummet. How do you feel about this? Do you think this is a problem, and do you think this is more of a reason why we need to have more of our own Muslim-owned businesses?
Yeah, I think so. I mean, the Sharia stock screening methodology that's used, I mean, is interesting, and a lot of people have questioned it at different points in time. But I think ultimately, Muslim investors should be channeling their liquidity should be adding a layer when they're looking at businesses to fund. And one of these layers, for example, is what does the business ultimately do? Away from screening as well, in the sense that is this a business that's benefiting the ummah? And I would say if you look at most of the businesses that are, at least on the US stock exchange, I would say highly unlikely.
Absolutely, yeah.
Yeah.
I mean, even if you look at Google, Tesla, all of these companies, leaving aside what they might be doing in Israel, in the Middle East, and all of that, I think the problem with a lot of these businesses is the idea of maximizing shareholder value.
Yeah.
And that concept of, all we're trying to do is just get more and more dividends paid out to our shareholders, whether that means cutting jobs or cutting quality, cutting corners on the final product, final deal. It's just all about that, pushing for that.
Yeah.
But what I love about what guys like you are doing, focusing on the small businesses, is that it's not really about that. Like, these are real businesses employing real people, helping out their own communities. Yeah. Was that a big part of why you wanted to do this?
Yeah, definitely. Grassroots level types of, if you want to call them movements to a certain extent, where we're really going down to funding businesses that form the backbone of the economy.
Yeah.
And helping level the playing field, because you've got lots of entrepreneurs within the Muslim community, very innovative and very real entrepreneurs, like can build something from scratch into a very profitable business. But yet, when it came to financing options, would not necessarily have the, let's call it the non-dilutive funding options to be able to grow. So that's one aspect of it. I mean, what's very interesting, Areeb, is that when you mention as well stocks, right? A lot of investors in definitely more sophisticated investors as compared to standard retail investors can use lots of different strategies to hedge the risk. So you could, for example, buy 100 shares of Tesla stocks and then purchase put options, right?
Yeah.
And if the value of Tesla goes below a certain level, you minimize the downside risk. Now, we're already at a disadvantage if you're gaining exposure, for example, to tech stocks that most of them are Sharia compliant, but yet very volatile.
Yeah.
And you're holding onto that stock portfolio as a Muslim investor with no downside protection. Imagine that, like you're in for a ride. I mean, it's yeah. I mean, it's if more Muslims are going to be putting their hard-earned money into pension funds, into different types of products out there, there has to be some level of understanding of the risks they're exposed to, because I would say the market we're in today, and even going forwards, might be a complete different economic regime to where we were before, just because of 100 years worth of. I mean, if we read into the Trump administration and what they're doing, right, we're looking at a new world order, if you want, a new world order coming into shape that is different to the one that existed for the last 100 years or after.
Post-World War II.
Post-World War II, exactly. Yeah. So if that's different, then even money flows are going to be different. So if he's looking, for example, to fix trade deficits with a lot of different countries, in theory at least, less financial flows are going to be going his way, just or in terms of the US. So what this means is that the cost of financing is going to go up, which means that stocks are going to go down, which means that their markets are going to be more liquid.
So you don't think the stock market could recover from this over time? Or it just might take a lot longer?
It's a good question. I mean, you're always going to have like recoveries over time.
Yeah.
But if we're looking at a new regime change, a new economic regime, a new state of play, I don't know in the long run. In the long run, what's going to happen, because you have a lot of different factors. Then you have so finance is based on, if you look at finance in general or finance textbooks, it's based on the interest-free rate, right? Not the interest-free rate, the interest rate or the risk-free rate.
Yeah.
Sorry. So the risk-free rate is the base of any cost of capital calculation, right? what's risk-free at the moment? Is it the US Treasury bills with that massive budget deficit?
No.
What's risk-free? I mean,
Doesn't really exist anymore.
it doesn't really exist anymore.
No.
Like, I mean, a lot of different things are happening. I mean, it's
Wow.
just...
I'm just thinking back to my economics lessons, and we would call that risk-free.
Yeah.
T-bills, the assumption that the government was always going to be able to pay that out.
Yeah.
But could that happen? Could I mean, absolutely.
Yeah.
And how do you feel about crypto? Because interestingly, stocks are crashing. Bitcoin prices are also crashing. I think crypto across the board.
Yeah.
And I get that it's sentiment as well. That a lot of people was really, really bullish on it, especially with Elon coming into the government in some way.
Yeah.
And him really being bullish on crypto in general.
Yeah.
Do you think it's all just sentiment and it's going to recover, or how do you feel about? You wrote an article as well. About, you guys put it out about crypto. What was your take on whether it's Sharia compliant or not?
So I mean, when you look at the meme coins, I mean, I put a big question mark on those. I mean, there's lots of debate right now in this space about whether it's Sharia compliant or it isn't. Bitcoin is interesting. Where is it heading? There is a high correlation between Bitcoin and the Max 7 stocks, for example, as you mentioned. It doesn't seem to offer that. It doesn't offer good diversifying characteristics in a portfolio because it swings, it's very volatile. So does it meet the criteria of a reserve asset? Not at the moment.
Not right now.
Not right now. Could it, if a lot of institutional funding came into play and the levels of volatility were brought down and the US started to purchase, I think they want to own $1 million worth of Bitcoin in a budget neutral way. Possibly, but I would say I'd much rather own gold just because of its track record historically.
Yeah.
Its importance in even in Islam. And I mean, anyone who's got a problem with gold will tell you, okay, but you need to store it safely. Why is that a problem?
That's what ascribes value to it.
Exactly, exactly.
Sure.
So if you were to purchase it, for example, from the Royal Mint and they're storing it there, if you press a button, you could send it home in a worst case scenario. So I think that's one situation. Then the other situation is all that stuff around can quantum computers decipher Bitcoin properly? I mean,
I've not heard this problem. So is it that the idea of a finite supply of Bitcoin may be in question?
That's what I've been reading.
Okay.
JP Morgan put up an article on that as well. And then the other one is encryption, whether they're truly encrypted or whether a quantum computer can decipher them.
Okay.
So it's these two things, whereby gold is gold. It's physical.
Yeah.
I mean, one interesting thing maybe is tokenizing gold, for example. Maybe that's interesting. But the one thing I would say personally that I don't like at all is the stable coins. That's just my opinion.
What's your take on that?
On the stable coins.
And for people who don't know, what are stable coins?
So stable coins are right now privately issued cryptocurrencies that are pegged to U.S. government debt. The question here is, going back to what we were mentioning around the risk-free rate, if essentially you don't think that a treasury bill is risk-free, because if you looked at the United States as a company, it doesn't seem to be very... you don't know where they're going to generate revenues from, right?
I mean, if you looked at the United States, if you looked at this country as a company...
Yeah.
I mean, you would shoot it in the head, right? You would tell people just to give up with the amount of debt that it is in, especially post-COVID.
Yeah.
Right. 100%. It's shocking. And then basically you're saying that if you're issuing a cryptocurrency off the back of that debt, that just seems really, really risky.
To me, it seems that they've created a buyer of U.S. government debt because other countries are not willing to purchase them anymore.
So it's just another way of screwing over the consumer.
I would think so, because right now, I don't know what I was reading last time, Tether and stablecoin issuers are the 7th largest buyer of USD bills. So,
really?
So if this is the future of money, It's one risky.
It's just like different layers of obfuscation upon obfuscation.
Yeah. And you've got some level of herd behavior going on,
Yeah.
so people don't want to question what's happening, and maybe we question too much. Maybe I question too much. I mean, but it's just looking at it financially from a finance standpoint, just doesn't make sense to me. I mean, and how does it give it? So it's not really limited in supply. It's not really so. Whatever Bitcoin is, it isn't. I mean,
the more I read about it, the more I feel like there are very few people who actually understand what's going on in the financial markets as a whole. And it takes me back to like just being an intern when I was at Deloitte, and I also spent some time on a couple of trading floors as well, just on like work experience and that. And when someone's explaining something to you and you're like an 18-year-old kid and you're just sitting there and you're nodding and you're like, yeah, I know. I know what's going on. But in reality, you have no idea what's going on.
Yeah, definitely.
And then you realize how many people in the real world, much older and more experienced and wiser, have been doing the same thing. For the longest time. And they don't actually understand how just the basic financial markets are working, let alone how cryptocurrency is working. So what hope does the general public have?
100%. So if you're coming in without questioning the mindset, so let's say in Islamic finance, right? If you're coming in and saying, okay, cryptocurrencies are halal. Let's say they are halal. Okay. And you're rushing to put your money into them, right? And then you get a massive crash, and let's say I'm someone who's not very financially literate, right? And I basically said, okay, I'd love to educate my kid. So you came in with the right intent. I'd like to send my kid to the best schools. And I can't really afford it, so I'm going to put all my savings into cryptocurrencies. Why? Because meme coins are going up, or whichever thing happens to be Sharia-compliant structurally, or from a product design standpoint, if you want. There is another kind of risk as well, right? It's the risk of these. I mean, I come from a valuation background, even when I was with Deloitte, and I could tell you I still can't figure out, like I've seen different methods of how they value these things, but they all seem to be based on trying to make something up, right? So, okay, if you're looking at one of the methods of Bitcoin, right, it would follow a similar method to gold, where here's the cost of mining gold, and here's where it's priced, and here's the standpoint where it makes sense to produce gold, and here it is in the crypto mining equivalent. Is interesting. I mean, it's really, it looks nice and everything, and you've got a couple of other methods as well, and you just wonder what is the intrinsic value of these currencies, and what is the price of these currencies. And these are two different things. Intrinsic value is how much it's worth.
It's really worth.
It should really be worth. And price is how much is supply and demand driven, right?
How much people are willing to buy it for today.
100%.
That's the thing. Okay. So you're worried there's a huge mismatch between those two things right now?
I would say so. So gold is priced at around $3,000 at the moment, right? Why is Bitcoin priced at?
I think it was $58,000 this morning for a single Bitcoin.
Yeah. So what?
Not that I purchased any Bitcoin.
I mean,
I just happen to know.
but you know what I mean, right?
Yeah.
Like why is this one, like what's going on there? I mean, and
there's got to be some speculation which is boosting that price for sure.
Sure. It's very interesting. I mean,
so where do you think this is all heading? What do you think, as Muslims, as a community, we should be putting our time and our efforts into to creating much more of a Sharia-compliant economy?
So it's a very good question. I mean, I've seen that you talk a lot about the circular economy.
Yeah. The Muslim pound, and us investing into our own businesses and creating our own businesses. Yeah.
So I mean, that's what I'd like to see more of. I mean, to be honest, I mean, if finance is the grease that powers the circular economy, and you look at the Muslim Ummah, right? And you look at all these Muslim countries that have so much to offer, and we're able to, let's say we have an excess of liquidity in the UK, but not necessarily an excess of projects to fund, right? If we funnel them elsewhere, and if you have a standardized system where you've got, for example, faith in the rule of law in another country, in a Muslim country, then you start having these cross-border inflows of FDI from countries where you might necessarily have a large amount of projects, but not necessarily capital to areas where you've got a lot of capital and not necessarily a lot of projects. So then we start to see money that's being used to improve the ummah, right? That's one aspect. Another aspect is how can we develop more products to meet people's needs? And really, I would say that. And most importantly as well, the need for innovation.
Which I'm super optimistic about as well, because alhamdulillah, like part of the reason we started this series was to really shine a light on how many Muslim entrepreneurs there are, how many people have been doing this, not just recently, but for a few years now. And it feels like we're at this inflection point, like there's suddenly a hockey stick of growth we're seeing of number of Muslims not just innovating and starting their own things, but working in pretty big senior positions within massive institutions, from not just financial services, but across tech and the like. So I think the next 50 years, and inshallah the world that our kids grow up in, will be really interesting from like a Muslim innovation type perspective.
100%.
In the UK, and God knows what it will be like in the US, because they're already just like a couple generations ahead of us in terms of what they're doing, especially on the West Coast. Okay, fantastic. We're starting to run a bit out of time, but any final words of advice for, they may be students, they may be people in jobs, or thinking about starting their own businesses. Is there anything you'd like to impart?
I know different people have got different risk tolerances. If you've got a really good idea, and you're, let's say you're a university student or you just graduated and you can afford to take a risk and go out there and really push your idea and see where it leads you, that's going to foster a lot of innovation, I think. Rather, if you don't do that, you'll never really know. There's no one way of going about doing things. For example, we took the corporate route initially, and then we decided to come up with an idea. That's one way of doing it. Another way is, but you do have some younger generations who are really, really quite, they're very smart and they might be able to go about doing things without having a corporate background, possibly. Then the next thing would be, if you're averse to risk, I wouldn't recommend this space because...
no, absolutely.
It's
a scary prospect being like, okay, not only am I in charge of... You're not even in charge, right? You're just kind of sitting there thinking... I've now got to chart out and forecast how I'm going to survive, not just for myself, but to pay all these other people. And their livelihoods are going to depend on you.
100%.
There's a lot of stress that comes with that.
So if you're fearful, the fear will cripple you. And you won't be able to act right. So that's really important. That's, I think, maybe one of the most important characteristics of a founder, as resilience is not being... fearing Allah, not fearing the process itself.
Absolutely. And having that intention set right from the beginning, like ultimately why you wanted to do this is you wanted to benefit the ummah in some way. And like, alhamdulillah, you're still here, I'm still here, and I pray that Allah keeps using us and not replacing us. And as long as we keep our intentions there, that will keep happening. Inshallah. Hassan, it's been a pleasure. How do people, if people want to reach out to you, how would they do that?
So you could reach out to us on www.qardus.com. And if you want to reach out to me personally as well, LinkedIn is a good method as well. So look me up and thanks for inviting me, Areeb.
No worries.
I really enjoyed the conversation.
Likewise, man. Likewise. Hassan, assalamu alaikum.
Wa alaikum assalam.
Thank you for listening to the Muslim Money Talk podcast. If you like what you heard, then please subscribe to Muslim Money Talk wherever you might have been listening to this. Give us a like and share it with someone who you think might be interested. It really, really helps us out. Thank you. Assalamu alaikum, and see you next time.